Hello traders, today is going to be a wonderful day of alpha. Speaking of alpha, my private Discord group is absolutely popping off. I'm so happy that you guys have joined. If you still have not joined yet, I would highly recommend click the link in the description below. If you want to see me trading live, predicting where Bitcoin's going to go, I actually predicted price was going to dump today, and many of us were lucky enough to short. If you want to see testimonials of other members, anything, we're only doing this Discord for $15 a month as of today, as of May 2023. So if you're interested in watching me trade live or watching my analysis of Bitcoin or of reading any private articles that I've written on different ways you can make money with crypto, then click the link in the description below and just try us out. With that, main topic of the video. Today's topic is overextended moves. The first thing I want to show you guys is correlation. Pepe has a 90% or 0.9 out of 1 correlation to Bitcoin and a very high correlation to total market cap. You guys see this? Pepe, Bitcoin, and total market cap. Bitcoin is very, very correlated to total market cap on the 1 minute as well. They are basically the same thing because Bitcoin goes up, altcoins go up. Bitcoin goes down, altcoins typically go down. Why does that matter? Here's why. Overextended moves. Let's go look at those. Whenever price makes a move, typically the reason that move happens is because of a lot of volume. But you can take advantage of people that make very large trades, and you can take advantage of them once you have this knowledge and basically what I'm about to teach you. So if we look here at 18, 19, 10, let's go look at the total market cap, 18, 19, 10. I hate that this changes too. I hate that they change at the same time. TradingView is annoying like that sometimes. So right here, you can see that this is the total market cap on the 1 second time frame. And you do need TradingView Premium in order to access this. However, there is a loophole. If you go to OKX, OKX's exchange shows every single cryptocurrency on their platform on the 1 second time frame. So if you want access to this but don't want to pay for TradingView Premium, just go to OKX and use their 1 second charting software. So look at this. The market cap wasn't really changing much. I think we can all agree nothing was really happening. But out of nowhere, Pepe just shoots down. What ends up happening in this situation? Well, Pepe shot down, but the market cap didn't move. What typically happens is when an altcoin like Pepe, it's kind of more of a meme stock, just moves out of nowhere, up or down, it will typically revert back if the overall market cap's not moving in that direction. Okay? And you can make a lot of money this way, because here's basically how. Price moved down, as you can see right here, but the market cap didn't. It just stayed flat. And because of that, Pepe went right back up. But then Pepe overextended again. It went quite a bit up. And then why did Pepe fall? Pepe fell because the market cap just wasn't changing. Because if crypto overall is not growing, then there's really not much reason for a lot of coins to rise. Same with if crypto is not completely dumping, there's not as much reason for cryptos to dump. Guys, it's super important for me to say though, this is a very short-term trading thing, so it's probably better for execution tactics rather than directly trading it. What I mean by that is, let's say you're bullish and you're waiting for a good spot to buy on Pepe, or bearish, I don't care where you are with this coin, whatever. This could help you try to pinpoint a great time to buy or a great time to sell. What do I mean by that? If you're bullish and there's a price drop, but the market cap remains flat or the market cap's actually rising, and you know that that the market cap is correlated to Pepe, then you could buy Pepe with the expectation that you're basically buying the bottom because it's going to revert higher. Okay, so this is a mean reversion strategy that basically looks at the market cap, sees what the market cap is doing to assess whether or not the move will continue. Okay. Now, of course, this isn't always going to work. There will be situations where like Pepe will rise, the market cap will do nothing or fall, and Pepe will keep rising, of course. But more often than not, what you're going to see in the very, very short term is something like this. Do you guys see exactly what had happened here? Pepe spiked right here on heavy volume. Buying, a lot of buying here. Pepe spiked up like 2%. After Pepe spiked up like 2%, the market cap was actually falling. Because the market cap was falling, Pepe just went right back down. So the way to actually take advantage of this is to wait for a volume spike on the 1 second time frame. You don't want to do this when there's not much volume, because then you're probably not taking advantage of this properly. What's better to do is to wait for a spike in volume such as here, here, or here. You get that spike in volume, and if the market cap's moving in a different direction, it can be a good idea to take a counter trade. Okay? So if we look at the present time, what we can see right here is overall the market cap is rising and Pepe is rising as well, almost in like perfect harmony. There's two ways you can use this system, okay? The first way is the overextended method that I just explained, which is very simple, just mean reversion. If Pepe out of nowhere just spikes up 2% and the market cap falls, it's likely that Pepe, like you had just seen about it a minute ago, Pepe is probably going to fall, okay? Now, there's another way to do this too, which is the opposite. Imagine that the market cap rises a lot, but Pepe hasn't risen yet. Like, look at this rise in the market cap. It went up 0.5% in a few seconds. But let's say that Pepe at that point hadn't really... Why is TradingView so annoying? Oh my gosh. So at about 1955.30, if Pepe hadn't had risen, it probably would have been a good time to have bought in the very short term. And you would have made about a 1% profit. Now again, guys, do know that these tactics are very, very, very short term. Of all strategies, this is probably the most short term and most quantitative because you're basically taking advantage of correlation trading using the total market cap or Bitcoin if you'd rather use Bitcoin rather than the market cap to make a trade on an altcoin. Okay? So yeah, if we look at another one right here, look at this dump in the market cap right there. Let's go coordinate that with the dump in Pepe. So we got a very fast, aggressive dump right here. So this would have been a signal to have shorted if Pepe hadn't fallen, which Pepe hadn't fallen yet. Look at this. You could have shorted all before Pepe had dumped. So this was just a really, really good signal because so many other cryptos were falling, i.e. the crypto market cap is falling. Because so many other cryptos were falling, it was just going to be a matter of time before Pepe was going to short-term collapse. And you can see here, Pepe just collapses. Okay? That's because as memey or as much of a joke as a coin might seem, a lot of these will just follow Bitcoin, and a lot of these will just follow the market cap in the short term. Let me actually remove that so you guys can see. Okay? So I just want to recap the two ways that you use this and the ways that I've been able to make actually a fair amount of money using this. The first method is looking for overextended moves where the altcoin that you're looking at is making a move that is not reflected by the market cap. Okay? So an example of that could actually be here. Did you guys see what just happened? The market cap fell actually a fair amount. It fell about 7 basis points. Now, when the crypto market cap falls that much, crypto market cap is still falling. It's probably good to short Pepe right now because Pepe is actually not really falling yet. But look at this. Pepe is probably, I'd say more likely than not, probably going to test these lows and go lower. The reason I think that is the market cap's slowly fallen off. So I think it'd probably be a better trade to short this. That's one way where you basically use the market cap as a leading indicator in the very short term. The other way you can use it is to look for overextended moves. So for example, if Pepe had just spiked up like 5%, but the market cap is just flat. The market cap of crypto is just flat. And that's probably a sign that you should probably short. So those are the two ways you can do it. The overextended move, where the market cap doesn't reflect it, and then also a little bit more risky, but using the market cap as a leading indicator. So i.e., hey, the market cap has fallen, I should probably short Pepe. Okay? So this doesn't just work on Pepe, it can work on whatever you want, you name it, anything that's correlated to the market cap and correlated to Bitcoin. If you want to find out correlation, go to Leviathan's indicator correlation matrix, and then you're going to type in the coin that you're interested in, because you do need to go look at the correlation. Because if you don't, you could be missing out on a lot of important information. Because most things are correlated to Bitcoin, but not everything. And do you guys remember how I just made a prediction that Pepe was going to fall? Look at that. I legit just made a prediction that Pepe was going to fall, and now it's down like 0.25%. And then just to spite me, it's like, nope, I'm going to rise. But yeah, Pepe did fall in the short term. Probably because just the market cap of crypto is falling. There's not much reason for this to spike any higher. So, and then out of nowhere, someone just bought, what is that, $192,000 worth of Pepe, which is probably kind of dumb. Because buying Pepe here is kind of risky when the market cap's not doing too well. Where was I? So yeah, so if we look at Sui has an even higher correlation. So we can go look at that as well and use these two methods. So as you can see, this is very similar as well. We can look for overextended moves and correlation trades as well. So if we look here, it looks like it's basically not overextending itself at all, meaning every move it makes is basically the same as the crypto market cap. So maybe you could use this as a leading indicator. Well, the guy honking outside thinks so. So for example, like right here on SUI, oh yeah, this actually could have been a good trade if you had shorted right before it had fallen. Yeah. There's a lot of ways that you can use this, guys, but I want to show you quickly how you can, oops, not OKZ, OKX. I want to show you guys quickly how you can use this on the 1 second time frame anywhere. So go to OKX, and then after you go to OKX, go to any coin you want and click 1 second. You now have access to 1 second data for free. You don't have to pay anyone, okay? And if you want to use something that's similar to the crypto market cap, you can use BTC USDT perp, and you can use this as a leading indicator to any altcoin. Okay, that's correlation trading. So if you guys are interested in correlation trading and learning more about using the market cap as a leading indicator or looking for overextended moves, then check out the Discord link below. With that, I hope that this is going to give you guys better execution. Also, better just analysis of, hey, this altcoin's spiking, but the market cap's not rising. What's going to probably happen? Stuff like that. Of course, this doesn't work 100% of the time. This is also a very short-term indicator, so you got to keep that in mind. But overall, if something's correlated and the market cap starts dumping, the coin you're looking at is probably going to dump as well. Okay? So with that, hope that this alpha has helped you, and happy trading.